Hello, Debbie Taylor here with our Market Minute. And what I want to talk to you about, I've got all my handy dandy charts here. What I want to talk to you about is why I'm worried about volatility this year and maybe even a little market pullback. And so I've got this chart in front of me that I'm happy to share with you if you'd like. And basically it's looking back at stock market returns going to 1990, which is a sort of long time, it's like 35 years, all right? And what you see when you look at the chart is that the market has a tendency to be up 2 or 3 years in a row. And then that next year, it will often be flat or negative. Now, yes, there are times where it's broken that rule. Like in the mid to late 90s, it was up several years in a row. But then we know what happened. 2000, technology bust, and it was dreadfully negative for 3 years in a row, right? So it sort of made up for the fact that it was so strong for 5 years in a row, and then it went down, abysmally down 3 years in a row. But what you see for the most part, and that's like sort of extreme, right? What you see for the most part is like 2 years up really good, then the third year like flat or just up a couple percent or maybe down. Then 2 or 3 years up really good, and then the fourth year flat or maybe a little down, or just like slightly positive. So what do we have now? The last 2 years have been very positive, right? 23% returns, basically 24% each year for the last 2 years. So now we're going on to year 3. So anything can happen. And anybody that's out there saying, oh, this is what's going to happen in 2025, they don't really know for sure. But we've got to be prepared with 2 such extraordinary years in a row. We've got to be prepared that 2025, at the very least, is going to have volatility, but maybe it could be that slightly down year. We don't know. And could 2025 be positive? Absolutely. And there are a lot of reasons to believe that, right? We have strong economic growth, consumer spending, low unemployment, relatively low interest rates. So lots of reasons to believe that 2025 could now be our third very positive year. And if that's the truth, and that actually happens, then I'm going to be here a year from now saying that 2026 is teed up to, again, be at least a little volatile and maybe negative. So I'm not here to try to predict short-term market movements, right? That is a fool's folly, right? But what I am saying is we do need to be prepared for some retrenchment and definitely some volatility. When that happens, we don't know, but that's part of being an equity investor. That's part of what we sign up for, and that's why over the long term we have such high returns, is because we know it comes with a little bumpiness along the way, okay? Call us with any questions, and thanks.